Hello everybody, this is Lara at Elliott Wave Stock Market and Elliott Wave Gold with an update on some cryptocurrencies for you. I really tried to get this video out last Thursday, but I had a whole bunch of other work to get through last week, so was not able to, but here we are. I am going to cover 6 cryptocurrencies with you today: Bitcoin, Ripple, Dash, Monero, T-Fuel and EOS. For all of Bitcoin, Ripple, Dash, Monero, I already have my Elliott Wave counts and classic technical analysis prepared, and I've already updated my charts, so this video won't be 8 years long. When we get into T-Fuel and EOS, we'll be doing new wave counts on clean data. I have not got any Elliott Wave analysis for those, but I've already done my classic technical analysis to try and keep this video in a reasonable length. Okay, Bitcoin is going down a little bit. How low is it going to go? If I knew that, that would be really good, but I don't. I can give you an estimate, a probable point, but I cannot tell you with absolute certainty where it's going to go. This is the full data for Bitcoin. This is back in its inception, or just after its inception in 2010. The low of this is 1 cent. This is a primary degree first wave ending here. Cycle degree first wave subdividing beautifully as a 5-wave impulse. There is enough volume, obviously, for Bitcoin to have pretty good Elliott wave structures. Primary 1, 2 was a 94% correction of primary 1. Primary 3 was 38.87 times the length of primary 1. That is not a Fibonacci ratio. There's no Fibonacci ratio between them, but that's the length of it. Primary 4 is a triangle. At its deepest part, the end of intermediate A, it was a 91% correction. That's a very deep correction. And primary 5. Primary 5 exhibits no Fibonacci ratio to 3. It's 15.87 times the length of primary 3. And then we have cycle 2, which lasted 1 year exactly. It's an 84% correction of cycle 1. I had expected it to be deeper. It's not, I was expecting it to be over 90%, and it was only 84%, but that's where it ended, and now we're in cycle wave 3. My targets for Bitcoin are highly provisional. I'm just playing around with numbers. I started analysing Bitcoin quite regularly back here, I think, and when we got up to this high, I was analysing it on a daily basis. At this high, I managed to pick that high 5 days, or on the 6th day after that high. I published an analysis on my website, which I'll link to down in the description box if you're interested in reading it, calling for a high in Bitcoin and calling for a huge crash. By any technical definition of 84% correction in price is a crash. Bitcoin has this beautiful tendency to form bubbles. Here's a bubble, it pops, and we have a crash of 94%. Another bubble forms, it pops, a crash of 91%. Another bubble forms, it pops, and a crash of the whole thing from beginning to end of 84%. And now it's forming another bubble, and it's exhibiting that bubble behavior formation tendency in classic technical analysis terms. Let's take a look quickly at the weekly chart. I think from this low here. Here it is. So now we're looking at cycle 3, subdividing as an impulse. It may only subdivide as an Elliott wave impulse. Primary 1, 2, 3, 4, 5. I expect I had this as an alternate last time I looked at Bitcoin. I was considering that this correction here, the current pullback, could be a primary degree correction, and that's what it looks like it is. Let's take a look now in order to try and answer the question of how low is this going to go and where's it going to end. Let's first take a look at the daily chart of it. Now we're looking at primary 4. I've got it subdividing as a flat correction, but I'm a little concerned at how long intermediate C is compared to A. This is, I think it's an expanded flat. Let me just quickly check the length of B to A, because that's how you determine what type of flat is unfolding, which makes it important to calculate your target for C. It's a 1.35 length of A, beautifully within that common range of up to 1.38. That's the most common range of B waves, 1 to 1.38 times the length of the A wave. An expanded flat has a B wave which was 1.05 or longer of the A wave. So this is an expanded flat. So the most common Fibonacci ratio for the C wave, now it doesn't have to be this, we're talking about probability, not certainty in all of this analysis. That's a really important distinction to make. When I'm giving you targets and I'm giving you support levels or resistance levels, I'm talking about probability, not certainty. And sometimes lower probability outcomes occur, and the very nature of probability means that when they occur, they're never what you expected was going to happen as most likely. Okay, which is why risk management is so important. So let's calculate the length of A, 10,364.562 times 1.618. And it's not going to be long enough. That target would have been 48,093. It's already breached that. So the next Fibonacci ratio in the sequence has a lower probability but is entirely viable, which looks like that's where it may end. Okay, so 10,364.5625 times 2.618. That gives us 37,728. which does not coincide with a Fibonacci ratio of primary wave 3. I've got a Fibonacci retracement level set here on this chart. This is drawn along the length of primary 3, which begins off to the left of the chart. Bitcoin's reached 0.382, the length of primary 3, but it looks like the structure of intermediate C is incomplete, and so I would expect it to continue lower. However, when we get to classic technical analysis in just a moment, it's also possible it could already be over. If it's over and it just rockets on up from here, possible, but I'm not too sure that that's what it's going to do, but let's be open to different possibilities. If that happens, then I would relabel primary 4 over at this low right here, and I'd relabel it as a double combination, flat, X, zigzag, although this looks like a 5, not a 3. Okay, so that target, 37,728, I'm going to put that on the chart, and then we'll move over to classic technical analysis for this. Let's jump over to classic analysis charts. This is a daily chart of Bitcoin. Okay, so at this high here, we've got double bearish divergence between price and RSI. ADX up here for this part of the upward trend had reached extreme, but not very extreme. ADX is now declining through most of this. The negative DX line crossed above the positive. It's now indicating a downward trend. The DX or the ADX line is below the negative DX line, so this trend is not yet extreme, and ADX is below 45. The trend is not yet extreme. However, RSI is reaching oversold. It can reach more deeply oversold though before Bitcoin finds its low, but we're getting into we are in oversold territory. I would expect the low to come sooner rather than later now. The last signal though from on balance volume was bearish. This line is nearly horizontal. That's been breached. This is the bearish signal here. It has 1, 2, 3, possibly 4 tests, so a few but not a lot. So there's some reasonable technical significance in that line. This is a reasonably technically significant bearish signal from on balance volume. Volume is pushing price lower here. This session is still incomplete, so this volume bar is incomplete. If it breaks through support at 42,500, next pretty strong support would be about 30,000. My target is somewhere in here, and there is a bit of a cluster. If you look left to find your support and resistance, there's quite a cluster in here, but this is the next strong support on the daily chart. Oops. What are we going through here? RSI, stochastics oversold. When stochastics on the daily chart reaches oversold, it does tend to correspond with reasonable lows in Bitcoin. So I would be looking possibly for at least a little bounce within an ongoing downward trend here. And just real quick, going back to that Elliott wave chart, minor wave 4 could be about to unfold. If this is correct, minor 4 can't move into one price territory. So if we do see a little bounce here for Bitcoin, I'd look for it to remain below 47,159.484. A new high by any amount at any time frame above that price point invalidates how I have intermediate C labelled, and then I would have to consider an ending contracting diagonal. Yeah, it would be contracting because 3 would be shorter than 1. So, okay, that's Bitcoin. Let's move on. We've got a lot to get through today. Ripple. So I asked in comments on the YouTube channel, what other charts should I take a look at? And I gave you some requirements. I wanted to see the ability of a cryptocurrency to form a bubble, so this vertical rise, this exponential growth, that's one of the definitions, or one of the characteristics, of a bubble, the ability for price to rise exponentially, and then a huge crash, and then coming up off lows and looking like having that curved form. This is on a semilog scale. If I show you this on an arithmetic scale, you can see what I mean. Look at that curve, slow basing action, and then this huge spike. It's doing it again. It's starting again. Okay, so this is perfect. I love this one. Actually, I picked this one way back here and purchased it quite a bit, actually. This is one of my favorites that I chucked quite a lot of money at. Well, not a huge amount, only amounts that I'm prepared to lose. If I lost it all, I would maybe lose a few nights' sleep, but not very much. I don't think that's going to happen. So far, everything's looking really green. So this is one that I've long had an eye on. It has really good looking bubble formation, and it's doing it again. I thought this was the low, but it went down to create another low, which is fine. So I purchased some, I think, back in here, somewhere in here, just prior to this low. So back down here under 50 cents. Oh yeah, it was like 30 cents. And now it's at $1.48. So that's doing well. So I've got some targets here, highly provisional. That's what I was going to say. Back in here in Bitcoin, when I was calculating those targets, it blew all of my targets away. At the end, I stopped calculating targets. I said I don't know where it's going to end up, but I had a list of technical indicators or technical things I was looking at to identify a major high. And when I got those things on the chart, and then I had a trend channel breached, I had really strong confidence that we had a high in place, and that happened 6 days after that high. I am expecting to be able to do a similar thing next time with Bitcoin and Ripple and these others that I bought. So this one, I think Ripple might be in a third wave, within a third wave. Well, a third wave at 3 large degrees could have ended here. If this is wrong, I'm going to need to move it down 1 degree. If this is wrong, it may not be bullish enough. Let's take a look at how this third wave is ending and what this fourth wave may be doing. It could be a triangle. So far it looks pretty good. It looks like it's going to be a regular contracting triangle. For regular triangle types, the most common type is contracting. Interestingly, in my research, I've found that barrier triangles are most commonly running. So what that means is if you're in a fourth or a B wave and a triangle is a possible structure and your B wave within it gets beyond the start of the A wave, you're looking at either an expanded flat or a running barrier triangle. Be aware of that possibility. So this one looks like a contracting triangle. The difference is important because within a contracting triangle, D may not move beyond the end of B. So if we get a new high above 1.75882, I'd be expecting intermediate 4 is not a triangle. I'd then be looking for it to be a zigzag or a flat. Intermediate 4 may not move into intermediate 1 price territory below 0.74482. This is cash data, this is not futures, and despite the enormous volatility of these markets, I will allow for absolutely no overlap. A new low by any amount at any time frame, a fraction of a cent on a tick chart, will invalidate how I've labelled this. Oddly enough, that actually means that this analysis would get even more bullish, because then I'd have to move the degree of labelling within intermediate 3 down 1 degree and see this as minor wave 1 within intermediate 3. And then the pullback would be minor wave 2. So intermediate 3 within primary 3 would be incomplete if this is invalidated. But for now, this is where I leave my invalidation point. So I expect for Ripple, if this is a triangle, we may see a little bit more of a pullback to end minor wave E, which may not move beyond the end of C. If price remains below this point and above this point, a little more pullback, and then it turns around and moves up to new all-time, or not all-time highs, but new highs above here, I'd see the triangle is complete and I'd start to calculate a target for you for intermediate 5. Not prepared to do that yet. Let's take a quick look at classic analysis for Ripple. Looking back at a weekly chart at its behavior, how did it behave up to that high in 2018? We have long basing action along here. We have a bullish reversal pattern down here in a hammer candlestick. We start to see vertical upward movement with support from volume. We get to a high here. This bearish candlestick here, I would not, I mean, technically, I think this may be a dark cloud cover, but this candlestick doesn't close reasonably into the real body of the previous one. If we do want to see it as a dark cloud cover, and I think I'd have to brush up and have a read again of Neeson, of the requirements for dark cloud cover. It may not be, but even if it were, it's pretty weak, so I wouldn't consider that. But here, this one is. It's close to a bearish engulfing pattern, but it's not. So we get a vertical rise, a little pullback, another vertical rise with weaker volume, a bearish candlestick pattern, a deep pullback, and a consolidation. Within it, volume is strongest on this upward week, suggesting maybe an upward breakout is more likely, and here we got it. It closed above resistance on an upward week with strong volume, another vertical rise, and now we get a bearish engulfing candlestick pattern at the end. Now remember, this high for Ripple is this point back here. That's what I'm looking at on this chart. I'm looking at this first big, huge bubble for Ripple. And then the subsequent crash. Let's just do a quick calculation. How much did that crash? 85%. That's a pretty good pullback. Well, that's not just a pullback, is it? That's a big crash. And now it's forming another huge, big vertical rise. There was no bearish divergence at the end between price and RSI. So this one, apart from your candlestick pattern and your decline in volume, and that would have been pretty concerning for bulls at the end. And once you got this bearish candlestick pattern, it was over for a couple of years, and it has not managed to get back up to those levels yet. I'm pretty confident, obviously, because I'm putting my money where my mouth is here. I'm confident it will be, but it hasn't got there yet. At the end, ADX only just reached very extreme. It was above 45 and just above the positive DX line, and stochastics had reached overbought, RSI no divergence. So that's what Ripple looked like at the end of that big movement. So I'm going to be looking for a similar thing again. First step is a complete Elliott wave structure, and then I'm looking for these technical things at the end. How's it looking right now? Here's the last high for Ripple. We've got, this is actually in, well, if we count these two candlesticks with their small real bodies as part of it, these four candlesticks could be an evening star pattern, but I'm not so confident with these two up here. But this looks pretty bearish. Not surprising, we get a pullback. These candlesticks, this one here had push from volume. We get some bullish long lower wicks here, so we get some upward movement. We've got ATR flattening off now as price moves sideways. This looks like a triangle, a classic triangle, which is a little different from an Elliott wave triangle. The rules, well, there aren't really rules, but the guidelines for this structure are not as strict as those for an Elliott wave triangle, but it looks like a triangle. Classic triangle patterns can be either continuation or reversal patterns. You need to see a break above resistance or below support with a close above those lines, and with resistance you need support from volume for confidence. Not so with support. And then for a classic triangle pattern, once you know the breakout direction, you use the widest part of the triangle, add it to the breakout point to calculate your target. Elliott wave triangle patterns, however, are always continuation patterns, never reversal patterns. On balance volume, price has got support and resistance lines in the triangle. On balance volume's got support and resistance lines. Let's look for a breakout here. It may precede a breakout in price. No signal yet, no breakout yet. ADX is declining after reaching very extreme. This is very extreme for Ripple. Well, remember we looked back at that weekly chart, this one here. ADX didn't get to these levels. It's gotten here on the daily chart. Didn't manage to stay there for very long, and now we're in a consolidation. The DX lines are whipsawing. It's telling us there's no clear trend at this time frame. At the high, I haven't put the line in here, but I should have, there is weak bearish divergence at the final high, and now Ripple's in neutral, RSI's in neutral territory, stochastics neutral, ATR flattening off, and so we wait for a breakout, and I expect it will be upward, but we may not be there yet. So Ripple's in a consolidation right now, but that bigger upward trend, I do not think that is done. I think this is a really, really good opportunity still for Ripple, because I think it's going to form another huge high, and the structure's not complete. Elliott wave structure, that is. Okay, let's move on to Dash. This was another one that you requested, and it meets the requirements. The ability to form a bubble, forms a bubble up to here, huge crash, 96% reduction in value. That's a crash by any definition, and now it's forming another bubble. Like I said in my last cryptocurrency video, bubble formations are fractal. Within a larger bubble, you will have smaller bubbles. Well, they're still pretty big. They form, they pop, they form, they pop, they form, they pop. They keep doing it over and over until they eventually have a final pop and then go back to some kind of realistic value. Like tulips never recovered their value. The South Seas bubble, that never recovered its insane values. Cryptocurrencies may eventually do that one day, but not yet. Okay, so I've got some targets for Dash for you, and same pattern for all of these pretty much. Cycle 1, cycle 2 here, a double zigzag. Cycle 3 may only be an impulse. I've got primary 1 and 2 complete. Within primary 3, I'm not labelling it over here. I'm labelling intermediate 1 and 2 complete, because primary 3 is probably going to end well above this point. This is a potential target for Dash. Again, these targets are highly provisional. This is for cycle 3 to reach 11.09 times the length of cycle 1. I know that is a really extreme Fibonacci ratio, but these markets do tend to exhibit extreme Fibonacci ratios between their actionary waves. So that's why I'm using those ratios. And I wouldn't use it in, for example, gold or the S&P, but I will in cryptocurrencies. Let's take a look and see what could be happening here for this pullback for Dash. For intermediate wave 2, so here's the start of intermediate 1, and it ends up here. It's an impulse, 1, 2, extended third wave, 4, 5. Let's expand this out. Okay, this chart, I am keeping this on an arithmetic scale because I want my Fibonacci ratios to be arithmetic and not logarithmic. Look at how the ratios change. If I change it to logarithmic, 6.618 is 135.576 or 220.665. What a huge difference that makes. It's my view that to be mathematically correct, this should be arithmetic, not logarithmic. So that's why I've got that scale. Let's pull this down so I can see the structure of intermediate 2. Let's get some labels in here. It looks like it may be a zigzag. It could totally morph into a flat correction. Could be a multiple zigzag, could be a combination, can't be a triangle. So that's my target for this pullback, 220.665. If it's wrong, it may not be low enough for Dash. And then when it's done, I am expecting for this particular market to see a third wave at 1, 2, 3 very large degrees, and a huge vertical upward movement that should be quite sustained, and really big values for Dash eventually. Again, that target highly provisional. For this one, when I've got the end of primary 3 and 4, and I know where primary 5 begins, I'll be then adding to this target calculation. So I'll have new targets later on. And eventually the idea is, as we get closer to the end of the Elliott wave structure, I can use more wave degrees to calculate a target. And now I'm playing with minor, intermediate, primary, and cycle, and I'm trying to find within all those calculations a small cluster of calculations, so I give you a small target zone for it to end up in. But as always with cryptocurrencies, I keep saying it, my targets are provisional. I will look at the end for classic technical analysis to show us what's happening. Let's take a look at the daily chart for Dash. Okay, at this high here, we had this bearish divergence between price and RSI. This is one little thing I really like to use to indicate a pullback on its way. ADX was extreme, not very extreme though. It wasn't above 45, it was only above both DX lines. RSI reaches deeply overbought, exhibits bearish divergence. Unsurprising, we get a pullback, hitting support at 180. Tested again here with a double bottom, now moving up again. At here we get, this is a dark cloud cover with a bearish upper wick. I haven't noted that on the chart. I should add that. It's got push from volume. We have also another swing high bearish divergence here again. I need to add that to my chart between price and RSI. And now we're getting a pullback. We'll look for support about 250. Below that, really strong support at 180 for Dash. Let's keep an eye on balance volume. It's got a new range. This is, let's see, this has got 1, 2, 3 tests. So this lower line has some technical significance. It's not very long held, but it has 3 tests and the line is virtually horizontal. Those are the 3 aspects of a line that give it technical significance. How long is it held? How many times it's been tested? And the slope. Horizontal is best. A vertical slope, no technical significance at all, obviously. So this one, horizontal, not too long held, only 3 tests. If we get a break below this, it's a reasonable bearish signal. Doesn't change the expectation of support here and here. ADX declining after reaching extreme, but not very extreme. DX lines now possibly whipsawing. RSI in neutral territory. There's still room for price to fall. Stochastics oversold. How does stochastics behave? Here, it reached oversold, we got a bounce, and then here again, just oversold, we got a little bounce, but not much, and then another test down here as stochastics reached oversold, and here again. So with stochastics just dipping into oversold, I would expect the low for Dash to come sooner rather than later, and I'd look for support at 250. So just a few more days, 3 or 4 or maybe 5 more days, a pullback for Dash, and then I will look for a bullish candlestick pattern. Here's a morning doji star. Here's another really strong morning doji star, also a bullish engulfing candlestick pattern. So we've got candlestick pattern here and here. We don't have one here. We have, this is a piercing pattern, yeah. I don't know, it looks like the open here is actually a little bit above the close of the red candlestick, so that may not be a piercing pattern. So possibly no bullish candlestick pattern here, but we do have one here and here and here. So let's look out for the next one. And if we see it, and stochastics is oversold, even if on balance volume gives us a bearish signal, I'd then expect support. And I'd expect a bounce and the next rise up for Dash. Okay, moving right along, Monero. Again, this one does not meet my definition. Well, it kind of does because it's in a deep pullback now. So we're still within wave 1 price territory. Now remember over a week ago, last video, I was explaining to you the basic Elliott wave structure. Here it is on a smaller time frame. Let's look at this one. Minor wave 5. It's step 1, 2, 3, 4, 5 steps forward. Wave 4 may not overlap wave 1 price territory. So if we look at this on a bigger time scale, a larger fractal, 1, 2, 3, 4, 5 is the expectation here. When 3 is complete, then 4, back over here, may not move into wave 1 price territory. And so if you purchase this, as I have back here for this one, if you purchase this within wave 1 price territory, then I am expecting, because I did that, I'm going to hold throughout the end of 3 and through the correction of 4. I'll just hold on because I want to get 5. And this is why. Look at the length that 5 travelled, 422 compared to 154. Not always, but most often for these cryptocurrencies, it's the 5th wave, which is much, much longer than the 3rd. That's where you get really, really big profits. So that's what I want to do. Okay, so within this 3rd wave, I expect we do not have primary 1 complete. And now I could change the degree of labelling here, and I may have to play with alternates in future for that. Do I have an alternate? What? No, that's not an alternate. And so far I expect primary 1's incomplete. Within it, I've got this as intermediate 3 and intermediate 4 incomplete. And validation, 70.055. That's a long way away. There's plenty of room for it to fall for Monero. There's a lot of overlapping in here. I'm wondering if this could actually be a triple zigzag. I'm going to be tentative with this Elliott wave corrective structure for Monero right now. Let's have a look and see what classic analysis says. How low is this going to go? This is the last high. At the weekly chart level, we had a bearish engulfing candlestick pattern. Volume decline, so we had this we had this volume spike strongly pushing price higher up to here. We have a bearish engulfing pattern here. It doesn't lead to much at all. Didn't have push from volume, and now we have another strong rise. This is a semi-log scale, this chart, so if you looked at this on an arithmetic scale, this would be a vertical rise, and it's coming with some decline in volumes, and then you have a bearish engulfing pattern, so it's unsurprising we're getting more downward movement. RSI is back into neutral territory. The trend is very extreme. ADX is above both DX lines and it's above 45. And stochastics now just dipping into neutral territory. So let's look for this pullback to continue. Do I have a daily chart for Monero? Yeah. I have not drawn my support and resistance lines along here, but I draw one along here at 280 for sure. I draw one along here at 180 for sure. So look for support, now at 280. Price is falling at this high. On the daily chart, we had double bearish divergence between price and RSI after RSI reached overbought. This is a failure swing, I believe, back here. That's another interesting thing to look out for when it does that. And so it's unsurprising we're getting a pullback here. On balance, volume still at support, though. If it breaks below the support, this would give us a reasonable bearish signal, but this line has a bit of a slope. It's not too close to horizontal, so that reduces its technical significance, but it is long held and it has multiple tests. So if we get a bearish signal from on balance volume, then support at 280 could be breached and we could be looking at a deeper pullback to 180. That's possible. My Elliott wave target would be 235.4682. If that's wrong though, that may not be low enough because these currencies tend to have really deep pullbacks. They are highly volatile. Let's look to see RSI getting oversold, price reaching support, and then let's look for a bullish candlestick reversal pattern for Monero.